right, mates, welcome back, Cryptocast. Welcome back to the channel. We're going to talk a little bit of XRP this Thursday morning. Hope everybody is doing well. Obviously, more crypto shakeout and fallout happening in the markets. Obviously, XRP for the XRP army. Shout out to you, mates. Did not break its resistance level in the last 24 to 48 hours. So what it's going to do is provide another trading opportunity. And that's what we are all about on this channel. Welcome, Sam. Welcome, Micah. Welcome, Jacob. Good to see you. So you just check it out. So it's very, very simple. Simple trades, okay? Remember, trading, not investing, okay? It doesn't matter about the lawsuit. It doesn't matter about all that stuff because this isn't a holding bags of XRP waiting for the big verdict in March. Okay, this is simply trading within the zone within your X. So you've seen this back on right before Thanksgiving. XRP right here. You're looking at the chart 41.5, right? So there's your short-term top in XRP. Okay, ultimately XRP is going to have to retest that level in order to have any of the moon or the moon bag or any of that effect that you're going to hear from a bunch of crypto YouTubers, okay? Okay. Inevitably, it's got to go past that level, right? And then on the bottom down here, and you look, we got it right above 37.6, okay? So that's your zone, okay? It is about a 4.5 cent zone, okay? That's all you really need to play, okay? When you're dealing with leverage. Doesn't matter whether you're 3X, doesn't matter whether you're 5X leverage. If you have any issues, any questions about leverage, hit me up in the messages. Doesn't matter whether you're on TikTok, YouTube, comment section, or if you're in the group, okay? What leverage is all about and what the proper leverage could be for you. Obviously, I'm not your financial advisor. You guys know that. But you're looking here in the intermediate term right here. Where are we at? We're trading, XRP is trading currently at 38660, okay? So it is below its 21-day and 30-day moving averages. But it is just above its 7-day. And if you look at just since Thanksgiving, using the method, what happens every time we break through the DMAs, right? What happens every time? Just simply look at the chart, mates. Every time. Go back since we had this pump of XRP going into Thanksgiving, we fell back down. As soon as we fell below the 7-day, which was 41 cents, right? Right at that top, it fell all the way back down below, at the time, it's all right, mates, welcome back, Cryptocast. Fell all the way back down, right? And so you got to see that here, what broke that 38 cent on a 30-day and collapsed. Okay, right? And then it's worked its way back beginning on November 28th. It broke through its 38 cent 7-day, challenged its 40 cent 21-day, okay? Broke through it, the 30-day, and then rolled up again to test that 40 cent zone, okay? And then you see the wickets here, okay? So it didn't reach back up to its pre-Thanksgiving short-term top, right, resistance level. But it made a move, a massive move of 230 to 260%, depending on what leverage you were on, for traders, okay? In approximately 4 to 5 days, okay? If you bought in, even if you bought there and sold up top, right? And so then again, we fell back below our 7-day, challenged our 21 and fell below our 30, okay? Boom. It's the way it is. Back again. See the cycle? Back again. See the cycle? Back again. See the cycle? Where are we now? We're right in the middle of whether or not we are going to test today 38 cents on the downside, 39 cents on the upside. We are currently in a green 4-hour candle, mates. This is a 4-hour stick, okay? It's a 4-hour chart that we're looking at. And you can see here what's going down, right? It needs to make up its mind what is going to happen. So a lot of people right now are in yes, Jacob, a lot of people are in a straddle trade right now, which means they have both positions open, a buy up and a sell down, because we are right smack dab in the middle, okay, of a breakout zone. And what do we mean by a breakout zone? This is the zone. If it moves above 39 cents and breaks right now its 30-day moving average and its 21-day, they're right next to each other, okay, you're going to get an upside push in XRP, and you're most likely going to get back to testing 40 cents, okay? And so people will be like, Jay, like, what's, like, look, man, it's like, it's 2 cents, 2 cent on leverage. A 2-cent move in a 37, 38, 39 cent asset is a big move, mates. It is a big move. Just do the numbers. Go to BTC Tools. Plug in your leverage. Plug in what you got going on. And see exactly what the rate of return is on your leverage trade at 3x, 5x, or 10x. Okay, in this environment, I don't recommend anyone going over 10x leverage just because this market is in a whiplash market. It's bipolar. It can't make up its mind yet. We've got the Fed stuff for December. We've got all that stuff. These are where you just want to trade within the zone and trade within the DMAs and use those as your waypoint and your guide point for your leverage trades. Don't pay attention to the content. Don't pay attention to, unless it's a macro thing like interest rates, Fed, or any of that stuff, that is going to move the market where everything is going to pump, like we saw right before Thanksgiving, okay? Or like we saw right here when everyone talked about the Fed and what they were going to do with the 5 basis point thing, okay? Then that's different when it's macro news like that, okay? But fundamentally, on a day-to-day basis, when you're in a bear market, you are just looking to trade within these ranges, mates. Within these, you just have it set up right here on your chart, 7-day, 21-day, 30-day, and play within these. And just go back. A lot of people be like, it's just too simple, Jay. It's too simple. I'm like, you're right. Trading is simple. It's when we complicate it with noise that people get hurt. Stick to your method. Stick to your discipline. Okay? And if you think I'm wrong, go back and test. Go back before you make any trade. And look at what's happened when something has fallen below its 30-day, okay? Fell below its 30-day right here, right? And collapsed, okay? Fell below its 30-day and collapsed, okay? Here, fell below its 7-day and collapsed, okay? And so you really, really want to think about that and how you gauge that for you, because those are your indicators. That's what's going to tell you. You're trading behavior. You're not trading price. I don't care if it's 50 cents, 40 cents, 30 cents. Doesn't matter. You're trading price, and you can replicate this onto any altcoin that you're looking at. And you should in this market, because the technical traders, which are active traders right now, most retail investors are not active right now in a bear market. They've already sold. They've already gotten out. And then they're just sitting back. It's the technical traders that are trading right now and the institutions. Okay? And so that's what they're looking at. They're looking at this. They're looking to wait and see XRP to break 39 cents, and then they're going to push it higher. Or they're waiting for it to break 38 cents on the downside, and then they're going to sell it down. And how far are they going to sell it down? Most likely to this 37.7, 37.8 range, because that is the next level based on these wicks since Thanksgiving that there are buyers for it. And that's how you want to utilize your DMA methods, okay? And you can change these up and trade them on the 5 and the 10 if you want. You can certainly do that. I like the 7, 21, and 30, and that's what I mentor people, and that's what I coach people. Yes, Micah, you don't have to. I use the 4 hour. The 4 hour to me is a great, just conservative. It's in terms of it's taking a lot in. You can use the 1 hour. You certainly could use a time frame below a 1 hour, though that is extremely, extremely more risky. To use a 15-minute chart or a 30-minute chart. But if you're running and gunning in and out, That works for some people, but not everybody. I mean, you've got to be on your chart 4 hour. You can go walk away a little bit. You don't have to be on the screen trading like a day, like, you know what I'm saying? 4 hour gives you a little bit more, leeway in terms of within the candlestick for the market to give you a signal to the actual behavior that's happening. And so that's why I like the 4 hour. It's been successful for me, but there are plenty of mates who trade on the 1 hour. And you can use that too as well and kind of see how the daily moving averages on the 1 hour and the 4 hour overlap one another to kind of find a sweet spot for an entry point, for example. Maybe if you're going to hold a bag, that's certainly doable. And to use that for just to dial in what's a good price to get in entry long or to hodl something, or maybe to get in now and wait for 6 months to a year for to shake out in any of these altcoins. But that's XRP. So you've got right now 4 hour chart XRP trading at 38,690. I'm waiting here, and this is what you should be doing. And let's see where we're at. You certainly a more risky investor could go ahead and get in now with an open. Like I said, there are people in the straddle. And again, for those new to the channel, a straddle is a method in which you have a buy up and a sell down in the same asset. Okay, usually on a trend line, a resistance or support line. And then once that asset demonstrates its behavior up or down, you then can make adjustments, average in your entry price, pull your short trade up or pull your long trade down closer to the zone or the current level in order to exit that trade, or you could just let that trade run, take the loss, and you've got the gains in your long trade. Okay, because remember, every depending on which direction it's going, you're if for example, if we get to 40 cents, your long from 38.6 is going to be well in profit, and your short from 38.6 is going to be in the negative until it gets liquidated, unless it falls to its liquidation zone. Not really necessarily going to happen, because if you're using 3x, to 5, that liquidation zone is going to be very, very, below. It's going to be below, and this is what you want. This is the conservative nature of the method. Is you want that liquidation price to be below the support zone to offer you a little bit more security in that trade. You can hold on to that while you've got your open long in profit, right? And you can, hold on to that for as long as you want to hold on to that, depending on your exchange, depending on, always keep in mind that if you carry your trade open overnight on many exchanges, you are charged a fee for that. So just make sure that you understand all the fees associated with your leverage trading exchange. If you got any questions, you can hit me up in the comments. You also can hit me up on TikTok, as well as mycryptoballers@gmail.com. If you have any questions about anything that I've talked about in any of my videos, and I'll most certainly answer all those questions. Be on the lookout for the next edition of the new newsletter as well. I'll post that in the descriptions going forward through Substack. That'll allow people to subscribe to that newsletter. It's a free newsletter, which will cover a lot of this stuff in terms of what you're looking at when you're looking at these charts for newer investors and for people who just want to get into leverage away from this hodl approach of investing in crypto and getting burned and then just trading crypto. And what the best way to do that is in terms of exchanges to use, in terms of your method of wallet, your storage, of how much money to keep on an exchange at any one time while you're trading, where to keep your money when it's not on an exchange, the regulated exchanges, why they may be more suitable for you than unregulated, why KYC, that's know your customer, know your client exchanges, if you're a U.S. citizen, may in 2023 be the way to go as your storage exchange while you're trading on non-KYC exchanges that may be offshore, leverage exchanges. So cover all that stuff going into the new year, kind of revamping, reformatting things, getting back to basics in this bull market, a bear market for the next bull market. So everyone's prepared for the next bull market when we see a lot more volume, mates, in this market. What you're seeing now is you're seeing institutions manipulate the market. That's the behavior that you're trading right now. It's not retail investors. Retail investors are on the sidelines. You want to get prepared, get your discipline, get your method straight, learn these things now, okay? Because when the retail investors show back up on the doorstep and start banging on the door to come back into this market, that's when you're going to get these pump candles, mates. That's when you're going to get all the stuff that you got in 2021, okay? After the 2020 crash, the pandemic crash of April of 2020, after the Bitcoin halving in May of 2020, okay? You got all the pumpness, right? And then now we're doing this during this bear cycle, right? So this is where you want to learn. This is where you want to dial in more on your education, mates. Hope everybody's doing well. Stay tuned for more videos. This is XRP. XRP trading at 38,924 now. We are approaching that 39-cent level, okay, which right now is the 21 and 30-day DMA on the 4-hour, okay? We are just below that. So we want to break through that here in this 4-hour shtick, and then we're going to see what happens. We'll do a recap video on XRP later tonight or tomorrow morning to kind of see how it all shook out. All right, mates.